Good afternoon, ladies and gentlemen. How are you? Welcome back to our live talk show. Sorry, today we are just delayed half an hour due to many technical things. You see, we have to delay my live talk show today. By the way, considering the price movement of US dollar against the Japanese yen and also US dollar against your favorite trade gold, these days the markets are very, very hectic. Hectic means wildly price move up and down, up and down. And particularly US dollar moved very wildly. And I prepared the 3 pages of PowerPoint for you to understand the current situation. In other words, US dollar's sentiment against Japanese yen and your gold as well. Let's move on to PowerPoint. I said wildly fluctuating US dollar against the Japanese yen. Okay. Since 27th of October, people are very concerned about the Bank of Japan's yield curve control. The yield is caused by the Japanese government bond, JGB, we call it, okay? JGB's yield might be changed to plus minus 1%. Bank of Japan allow to adjust the yield up to 1% or sometimes higher or minus 1%. Anyway, we call it YCC, yield curve control, was done by the Bank of Japan. And then I still remember 28th night, Nikkei Shimbun, this is a Japanese newspaper company, such as the Financial Times, Japan Financial Times. A lot of economists, analysts, they read this first-class Financial Times in Japan. And the middle of midnight, Japan Financial Times leaked the information that Bank of Japan might change the yield of 1% or higher by the yield curve control changing. So since that time, see, market was collapsed from the 150 yen level to 148.780, something like this. This is just a leak information, and market was so sensitive to react to this leak information from the Japan Financial Times, and then the price went down to 150 to 148.780. I think this is too much. Okay, this is just a leak information, right? And we are not sure whether BOJ will do the yield curve control changing or not. Without confirming the truth, the market was so reacted, and then we made this downtrend trend from this level to this level. And then next morning, BOJ, particularly Governor Mr. Ueda, appeared on TV, and he made the remarks that Japan will maintain the monetary policy the same, but yield curve control can be plus minus 1% or sometimes a little bit higher or a little bit lower, depend on the situation. Okay, so people start to feel, oh, Japan will do the will not change the monetary policy, and since then, you see, dollar go up again to 151.701. But think about the one day before, you see, people lost the confidence on the US dollar, and then US dollar went down here, right? And then next day, price go up. everything is psychological, how to say, effect. But I think this is a little bit too much. Depends on the real importer and exporter, cash dollar spot trader, this kind of, how to say, wildly traded the price movement are not welcome. And also Bank of Japan, same as the dual mandate of the FRB, we want to stabilize the price, and also we want to maximize the employment, same as the US style, but this kind of fluctuation is a little bit too much. So today I would like to briefly explain this, but the next week from Tuesday, I want to do this again with the visa. I hope you to understand 100%. So I would like to invite the visa, and then he will do the Khmer translation for you to understand more deeper. But today, just briefly explain to you my intention, why I have to share this information to you. Okay? So second page, the price movement of 3 yen is intricately related. Intricately is very complicated, okay? Related to the difference in interest rate between Japan and the US, and investor sentiment resulting from the BOJ's intervention, okay? So price go up, and then investors start to worry, maybe BOJ will do the currency intervention, means buy back the yen and sell US dollar in order to protect our domestic, how to say, import and export company, okay? So this is also very important factor, but today we will not discuss this in detail. Next Tuesday, I would like to share some information, okay? And then the thirdly, most important thing is the difference of the interest rate between Japan and US. As you know, US is doing the interest rate hike, right? Now the interest rate is over 5%, but Japan, for the last 20 years, Japan's interest rate is very low, okay? Less than 1%, 0.98%, and now Bank of Japan would like to change its interest rate yield to plus minus 1%. Of course, we have such a big differences between these two countries. Do you think these big differences can be adjusted to shrink? No, I don't think so. It will be the long way to adjust these differences. But generally, this interest rate difference is shrinking, okay? But it will not be happen in short time. Maybe I expect from the 2 years bond yield between Japan and US. Japan had a 2 years bond, government bond, treasury bond, and in Japan we have a government bond, right? These 2 years and the 10 years, we have to pay attention toward the bond movement. From this bond movement, the yield, the interest rate is always fluctuated, okay? But this big differences cannot be, won't be narrow anytime soon. If FRB decrease the interest rate, and if Japan change the monetary policy to the tightening, and then change the yield curve control, maybe this will be shrinking, narrower. But it takes a long time. Maybe I presume next May to June, this big gap will be narrow. But at this moment, until end of this year, up to December, we have just 1 month and a few weeks, right? So during this just 1 month and a few weeks, this condition cannot be changed so drastically. If they do, the economy will be very, very distorted, very bad condition. So I still think that the US dollar is going up. Actually, since this morning, since yesterday, US dollar recovered a lot, right? So like this. So if we analyze this kind of very hectic situation, what is the main factor to influence to the market? So I would like to share these three things next Tuesday with the reasons. So you may have some idea. US dollar is going up, so gold price going down, right? But do you know, sometimes, even yesterday, US dollar and gold price are going up together around 8 o'clock Cambodian time. And after that, once the New York started, our price movement of the dollar and price movement of the gold carried out the different way, because generally speaking, US dollar and the gold has a negative correlation, right? As you already studied together with us. But these days, because of the geopolitical risks, sometimes people would like to hedge the asset to the greenbacks, US dollar, or sometimes Japanese yen, Swiss franc, and gold as well. Gold is regarded as a safe asset, okay? So sometimes gold and US dollar move up together, occasionally. But usually, gold and US dollar has a negative correlation. So if the gold price go up, not the gold price go up. If the US dollar go up, gold price will go down. Okay? If the US dollar going down, gold price will go up. Okay? This is the situation caused by the geopolitical risks as well. Okay? So Monday, I would like to come back again with the visa, and then let's discuss this market sentiment of the US dollar together with you, okay? And also today I would like to share verbally one more thing, okay? I know every day you are watching the chart, right? And in order to enter to the market, in order to, let's say, buy gold or sell gold, you change the time frame, right? Usually from the 1 month, 1 week, 1 day, and 4 hours, and 1 hour, and then smaller, shorter time frame. It's okay for you to understand watching those couple of time frame charts in order to enter. But sometimes you see your way of watching, we call it time frame chart analysis, are wrong. Because you see, once you enter, you're always watching 5 minutes, right? Usually 5 minutes. Or somebody want to watch the 1 minute. And then you just pray for the God, please, if you're a buyer, up, please, God, please help me. Huh? But actually, how to say, emotional or your activity, I don't say wrong, but be practical, more than as entering, you see. You have to understand and you have to observe the environment after you enter, whether this price is already peak or we still have some uptrend or downtrend to the peak or to the bottom. So in order to come up to this conclusion, you have to do the time the frame chart analysis. Okay? You enter, don't just look at the 5 minutes, okay? You have to check at least if you are a scalper or day trader, let's say 4 hours, okay? And 1 hour. I should say 1 day, 4 hours and 1 hour, and then 30 minutes, 50 minutes. And then you will know where you are standing. I mean, where is your price, okay? High level or low level. So this is more important than the time frame chart analysis when you are entering. After you enter, okay, you have to think about the risk-reward ratio as well. and then you have to calculate how much price movement are allowed to a stop out level. You have to do many things. So in order to do things, to get the correct idea, I want you to do the multi-time frame chart analysis rather than just go into the market. After that is more important. How to get the profit, how to cut loss. If the price, if you study is very accurate and adequate, you might know maybe this price will gain another few dollars or you lose another few dollars. Okay, so rather than entering to the market, I want you to watch the chart, multi-time frames analysis after entering, okay, in order to get the really good profit. So including this kind of issues, next week we will do the more deep study about the dollar sentiment together with the gold price. Okay, thank you very much for your watching. By the way, tomorrow is Independent Day, so enjoy your Independent Day with your beloved family. Okay, stay tuned with us. Thank you very much for watching. Thank you.